Hello everyone, welcome to Indian Economy by Aman Soni. In today's news, sir, we shall be discussing the important articles related to economy from the Hindu newspaper. In the editorial page, there is no news related to economy, and in the open editorial page, we don't need to read this discussion. We can skip it because we have already discussed the impact of oil pricing, how the fuel prices are decided in India, what is the methodology followed by the oil marketing companies, and how the global crude oil prices would impact the retail inflation in India. We have already discussed in the previous news hours, so we can skip this discussion. In this explainer, it talks about how the value of the Russian ruble is increasing even amidst this Russia-Ukraine conflict. The backstory: we know that because of the conflict, the Western nations had imposed sanctions on Russia, and out of the many sanctions that they had imposed, one of them was removing few of the Russian banks from SWIFT payment system, and USA and other countries had freezed the Russian foreign assets which were there in those countries. So the foreign reserves of Russia's central bank, whatever was there in the Western countries, that was freezed and they were not able to make transactions out of that. Various British companies like the British Petroleum, BP and Shell pulled out of Russia from doing business. And because of the sanctions, it became difficult for the Russians to sell the goods and for importing and exporting and to make the payments for the imports and exports. We have been discussing about how even the Indian importers and exporters are trying to find a new mechanism to make payments with the Russians because the dollar exchange was stopped. Now the value of Russian ruble before the conflict, it was around 81 Russian rubles equals to 1 US dollar. Now during the conflict, it fell to 150 rubles. Now again within this 20 days, it has come to 83 Russian rubles. It has almost increased to what it was before the previous conflict. So how has this recovery happened? How is this possible within such short period of time? So here we need to understand the basics of exchange rate. The value of any currency against another currency is based on demand and supply. For example, for X amount of US dollars in the market, if the value of Indian rupees increases and the demand for, if the supply of Indian rupee increases and the demand for US dollars increases, then the US dollar would appreciate compared to the rupee, because more and more people want US dollar. They are selling Indian rupees and they want US dollar. For example, when the foreign portfolio investors, they are moving out of the country, they would want to divest their shareholdings in the Indian market. They would sell rupees and buy dollar because they want to move out and take the capital to their nations. So here the demand for dollar as compared to rupee increases. So the value of dollar against the rupee increases. The value of rupee depreciates. At such a time, what would the RBI do? RBI would have forex reserves. It would pump in dollars into the market. RBI would increase the supply of dollar into the market so that the demand for dollars would stabilize and the value of rupee would stabilize again against the dollar. Here, because of the increase in the demand for US dollars, the value of Russian rubles fell and people were selling Russian ruble. The supply of Russian ruble increased because the investor thought it's not safe to invest in Russia because of the conflict, because of the uncertain situation. So the supply was high for the Russian rubles and the demand for the US dollars also was high. So one side the demand is high, the other side the supply of Russian currency is high, because of which the value of Russian currency fell tremendously. Now it has recovered again back to the previous level. So how has this happened? Now because of the sanction, the Bank of Russia could not increase, like we discussed here how RBI would increase the supply of dollars so that the value of rupee against dollar stabilizes. Because of the sanctions, the Russian bank was not able to increase the supply of dollars in the market. because all the dollar forex reserves that it had was with the banks in the abroad nations, and all those were freezed by those western countries. And on the other side, the demand for foreign goods and services kept increasing in Russia, because of which the value of Russian ruble fell. The Russian central bank had to counter this, so it took various measures, and one of the measures is the capital control measures. It imposed restrictions on the capital. Here we discussed about when FPI is outflowing out of India, the demand for US dollars increases. If government of India restricts that you cannot take away your money out of the businesses in India, so they cannot take away the money would be struck in the nation. But in the long term, this would adversely impact the nation, because no investor would want to invest in such a country where there is no free flow of capital, because as an investor he would want to invest the money whenever he wants and take out the money whenever he feels that that investment is not worth it. So now, to control the situation, Russia had imposed capital controls, and the flow of money from Russia in form of dollars was stopped, and this slightly reduced the demand for dollars. And again, the major thing, Bank of Russia ordered all the Russian energy exporters to get only in Russian rubles, to get their payments only in Russian rubles. Here we need to know that even though the West had imposed sanctions, hypocritically they didn't impose sanctions when it comes to oil, because they are heavily dependent on the Russian oil. We saw how European Union's 40% of natural gas needs are met by Russia. So because of which Europe was still purchasing oil from Russian energy exporters. Now Russian energy exporters, because they have the bargaining power, because they control the majority supply in the market, they said that in order to take oil from me, you have to pay me in Russian rubles itself. When they started doing that, now obviously all the importers from the European nations who are dependent on the oil and natural gas, they had to pay in Russian rubles. So in order to pay in Russian rubles, they need to have Russian rubles. For that, the demand for Russian rubles increased as against the dollar. Again, when the demand for Russian rubles increased, the depreciation that the Russian ruble had gone against the dollar, it came to slowly stabilize. And the third measure was, the Russian brokers were not allowed to sell the amount to the foreigners. Even though the foreigners wanted to sell their assets in Russia, the Russian brokers didn't affect the foreign exchange brokers, they didn't allow that, so that the foreign exchange could not go out of the country. All this prevented outflow of capital, and because the demand for Russian rubles increased, as the Russian energy exporters demanded payment in Russian rubles, slowly the rate came to be stabilized. And the other measure took by Russian central bank is that it increased the benchmark interest rate to 20%. So when you increase the benchmark interest rate to 20%, the interest that you get on your loans deposited with the banks increases. So people would want to invest in such a country where the returns are high. So there have been discussions even in the Western nations that so many of the Western people, they wanted to invest in Russia and make money out of this investment, because they are not morally bothered about the war. They just want to make amount from the finance. And what is the implication of all this? The article says that in the short term, the Russian government can artificially control and increase the impact. This doesn't mean that the Russian economy has recovered completely, because the inherent damage that the Russian economy has suffered because of the war, it would have an impact on the Russia for a longer period of time. And now, because the Russian energy exporters are demanding payment in Russian rubles, Russia is able to impose terms on the European importers. What if suddenly the European importers stop making the payments in Russian rubles and they find some alternative? We know that that is not going to happen in the short period of time, because there are no alternatives. But until that time, Russia has bargaining power and it can impose terms and conditions. The demand for restoring the old pension scheme. Earlier, what used to happen? The government used to bear the cost of pension for all the central government employees. So in 2004, the government thought that The impact of bearing the cost of pension and paying the pension out of the pocket of the government is becoming too much for the government. The cost that the government has to bear is too much. So in 2004, the government came up with new pension scheme. Under the new pension scheme, the employee would make a amount of X% of contribution of the salary, and the equivalent amount would be made by the employer. For example, if the employee had to contribute 12% of the basic pay for towards the pension, the employer would contribute equal amount, and this 24% of basic pay would be deposited as pension amount to the new pension scheme. So this new pension scheme, here it would be managed by the private fund managers, for example the LIC managers, the SBI fund managers, and the pension fund regulatory authority. It has given guidelines on where this amount has to be invested. Mostly the amount has to be invested in the government securities and other safe securities, bonds of LIC and other PSUs which are safe to invest, and whatever the returns of the NPS are, they would be market linked. So here the government has to contribute the equivalent amount, but it need not bear the cost when the person retires, because the person will get the fund from the national pension fund. There is a separate fund where all this amount of all the employee contributions go, and this amount would be invested in the market. So it would get returns out of the bonds that it has invested into, and here the returns of the employee are directly based on the performance of the fund. So now many employees have been demanding that they want the old pension scheme, because there is certain guarantee in the old pension scheme, but the government doesn't want to go back to the old pension scheme because it would mean that the government has to bear the risk and the government has to pay out of its pocket for the pension. Now whatever the returns, it would be completely market based. So that's about this article which discusses about the pension fund scheme. And now few of the state governments are going back to the old pension scheme, wherein states like Rajasthan and Chhattisgarh, they are shifting to the old pension scheme to the state governments. In the business page, the core sector output rises by 5.8%. Here we need to see that sometimes even when the percentage output rises, the absolute value of production would not have been raised, and this can happen because of the base effect. For example, if you take cement in this month, compared to the last month, it grew by 5%, but the output was lower than what was in January. It happens that in the previous month the output was so low that even a slight increase in absolute terms compared to the previous terms, when you calculate percentage increase, it would be high in terms of percentage change. This is known as base effect. Sometimes because of base effect, the percentage increase would be misleading, so we need to understand why it is happening. Trade gap increases and the current account deficit increases because our imports are more than exports and the FDI is also reducing. We need not go through the details of it. We can skip this news. External debt of India increased, and here for prelims the noteworthy points are, out of the external debt component, out of the borrowings that we made from the foreign countries and the financial institutions, the major part of the debt is made of commercial borrowings, that is the companies borrowing from the foreign stock markets, and the second major component is the deposits by the NRIs, and third is the short-term trade credit. We could be asked to arrange them in ascending or descending order, or we could get a statement question saying that the largest component of our external debt is composed of the deposit by NRIs. So that would be a wrong statement, because the largest component is because of the commercial borrowings. We can skip the news of SpiceJet. Policies of oil marketing firms curbing the ethanol output. We have been reading news about how the government has a target of 20% of ethanol blending by 2025, and for this we need around 1000 crore liters of ethanol. In order to achieve the target of 20% of blending by 2025, we need 1000 crore liters of ethanol, and we are not able to currently produce that much, and the policies of the oil marketing firms are affecting that, says the Indian Sugar Market Association, Sugar Manufacturers Association. So the sugar mills are saying that currently they don't have the capacity to produce these many liters of ethanol, and for that they need to increase their capacity. To increase their capacity, they need capital, they need money. For that they need to go for the banks. Now the banks are not ready to give the loans to the sugar mills to increase their ethanol production capacity. The banks are demanding that the sugar mills have to get a long-term purchased agreement signed between oil marketing companies and the sugar mills. The banks want to play safe, so they are saying that you go to the oil marketing company, say Hindustan Petroleum Limited or Indian Oil Corporation Limited, you get an agreement signed with them that we would be supplying you ethanol for so much period and you would be paying us so much. So the bank, from this agreement, if the bank has, this is like a guarantee for the bank that this sugar mill which is asking for the loan, it is going to have the business in the future, and its loan is not going to become a non-performing asset in future. So they're asking this pact as a kind of guarantee. And currently the oil marketing companies, they are already incurring losses because of the global crude oil prices, and the retail prices were less. So they are not giving these pacts to the sugar mills. They don't want to commit anything at this moment, because of which the sugar mills are not able to raise money to invest into additional infrastructure to produce the additional ethanol that we need for the blending. These are all the articles related to economy today. Thank you so much.